One of the biggest challenges facing new investors and new syndicators in the multifamily real estate world is how to deal with rents, how to figure out what they should be, how to budget for rent increases, when you should take rents up, when you shouldn't. In this clip, I think we do a pretty deep dive in a Q&A format as to how you, as a potential real estate operator or syndicator, can potentially handle rent increases. I hope you enjoy the video. It's part of a series that we do with small group training. If you're interested, let us know and we'll get you in touch with the right people. All right, thanks. Enjoy the video.
How do you stay full with renovations? I'm imagining.
Just what I just did. So what I do is, as the units turn, see, every month we get an expiration report. 5 leases are expiring. What's the loss to lease? Now, this property is one of the most aggressive that we've done. If you renew with us, I take the loss to lease, the difference between where you're at and what market rent is, and I'm raising your rent at least half of that amount. That's, in some cases at this property, $200 to $300. And people are like, oh my God. And then they get in their car and they drive to Oasis, they drive to Paddock. This is literally what they do. And they're like, oh, Jesus, man, this sucks. Okay, I'll renew. I did nothing. I still got my half of my loss to lease recovered. So, but some of those people will say, dude, I got to go move somewhere else. And they will literally move to a different neighborhood, vacate the property. Now I renovate it and I bring it up to full market. So I control the rate at which we turn by how aggressive my rent increases are. I'm kind of managing it by looking at the expiration. If I got 20 expirations in 1 month, I'm going to be a little more careful than if I have 5, because I don't want to vacate 10 or 12 people.
So this, guys, this is not just important to evaluate if you should buy the property and if the numbers make sense. It's important when you're operating the property, like Ken's saying, so that you're constantly maximizing your NOI and bringing that valuation up. You have to know this. Like, this is so important. If you don't understand the rents on the property,
yeah, it all starts
there. And in the area, you can make a bad decision and buy a deal you shouldn't be buying, and you could not manage it the way it should be managed to maximize your profits. You're in this to make money.
Yeah.
You know, so you want to give yourself the best chance of not only finding and buying a good deal, but also maximizing your profits on that deal.
One of the big questions people are asking me right now, investors, is they ask me, how do you know rents are going to keep going up, right? Well, I don't. What you saw me do is what I did when I bought the property. So my goal is to prove the market is already there where I'm projecting. I don't have to hope and pray for 2 or 3 years of rent increases. I can see that today I could get my renovated rents, right? So that takes all that guesswork. So now when you stand in front of an investor and they say, you know, some of these guys will say, well, rents are not going to keep going up 10, 15, 20%. I don't need them to go up at all. In fact, after I renovate, my number is 2%. So that means, that implies, for analysis, I don't really do this, but on my analysis, my $1,300 a month rent is going to go up $26. Like, really? Like, there's no way I'm only raising it $26, right? I mean, that would be a really rough market. So my point is, it gets really conservative.
So this also, like Ken's alluding to, is going to make it easier for you guys to raise money too. If you show a good rent stack and you can validate your numbers and you know and you understand it and you could present that to investors, that's going to give them confidence that, okay, this is, you know, this is a winner, right? Because there's a $400 gap and you're only showing me 150 that we're going to raise them and make money. So it's going to make me as an investor feel more confident in you and that you understand the property and what you're doing. So
let me ask you, does anyone on this call think that I don't know this market based on how you've seen me develop it? See, that's the feeling you want your investors to have, because when you get that level of confidence with them, they want to invest with you. They want to work with people that are not afraid to do the work and really know their stuff. There's no question. They're like, dude, how can you argue with this? I mean, look what I just did. I showed it to you. It's live. It's real.
When you're delegating the rent stacks and or other underwriting components, how do you make sure the information is accurate?
It's a good question. So yes, every system that we develop in our company has somebody doing, somebody reviewing, and then some sort of check to make sure that it's happening when it should. See, what happens is I get to know the market. If I see what I expect to see, I'm cool. But if I see something moving in a direction that I didn't expect, then I'm going to dig in, right? Because that's what, as a manager, as a top level manager, I have to have some faith in the people that we have. And so we do have some review. I do spot check. What happens in my world is I get to know each person and they get to know the people below them. And they know people generally make the same mistakes all the time.
Yeah.
You just kind of get to know the people that you're working with, and you kind of predict their errors.
Right.
Or you try to, at least. We're not perfect, all right? I mean, it's not a perfect system, but that's what we do. If you like the content that we've shared here, please be sure to subscribe to our channel and hit the bell. So thank you again, and have a wonderful day.